supportive families. This is Emily Penrod. My guest today is Dan Matheson from True Wealth. He is a financial advisor. He has excellent information for parents, but before we start, I need to read this disclosure. The information contained in this podcast is for information and education purposes only and should not be construed as tax advice. Consult a qualified tax professional before making any tax-related decisions. To ensure compliance with requirements imposed by IRS Circular 230, please be advised that any content discussed is not to be used for the purpose of avoiding penalties under the Revenue Code or promoting, marketing, or recommending to another party any transaction or matter addressed herein. Dan, welcome.
Thank you.
Thank you for joining us.
Wow, you did a good job on that disclosure, Emmylou.
All right, and I understand there are some legal issues you need to make sure that is addressed.
Yeah, just want to make sure people know that I'm not a CPA. The information that we're talking about is certainly educational, but we really do want you to work hand in hand with your CPA or qualified tax professional before implementing any of the information that we talk about today.
And I think that's important for families to know. You know, it's 4 times as expensive to raise a child with special needs as a child without any special needs. So they need to know, first of all, why they should work with a CPA tax advisor.
Absolutely. I think that's one of the most important things can do for their financial life is make sure that they're utilizing the tax code to their full advantage. We are required to pay income taxes in this country, and it is a privilege that we have to live in the country and receive the benefits here from. But at the same time, we are not required to pay any more than our fair share. So, and there's nothing that prohibits us from doing proper tax planning. Over the years, Emmylou, I have come to the realization as a financial professional that as I meet with my clients, one year I might beat the market, I may not beat the market. And one year, one financial advisor may do a little bit better than I do than a different financial advisor. However, taxes will have much more to do, in my estimation, really. You've got a lot more control over how to the final outcome of your financial stability by using the tax code properly than you do trying to outsmart the stock market. So that's my thing, and I don't think people really realize that. So
I think most people don't even understand the tax code. It's so confusing.
That is so confusing, you know, and you're in good company there. Albert Einstein once said the hardest thing in the world to understand is the income tax. So, hey, by the way, did you know how many pages there are in the tax code?
I'm sure I don't know.
Yeah, about 73,954.
Oh my! I was going to say it's probably in the thousands, more than that, hundreds of thousands.
Yeah, 73,000. You know, the Bible only has 700,000 words. The tax code has 3,700,000. So, anyway, just a little bit of information.
So, just out of curiosity, has anyone read all of that?
I certainly haven't. Not even on those nights where I can't sleep.
Yeah.
But so what the idea, what I'd like to share with you folks is, first of all, hats off to you for doing what you're doing with special needs children. I really admire that. One of our very best family friends and their family, Sam, he has Down syndrome, and we have just loved him through the years, and it's just so fun to see his life and the way that he lights up the rest of the world. And I've worked with his parents for financial planning, and there are different needs that people have, and definitely you'll want to be working with an attorney and a good CPA.
Yes. I just recently interviewed Genevieve Gribble with Intervivos, talking about
yes.
planning.
Yep, very good. I'm familiar with Intervivos.
What tips do you have for parents of children with special needs and their unique financial demands?
The first thing that I would say, Emmylou, is make sure that you're planning ahead. Think strategy. It's not just about getting your tax returns filed properly. It's about strategy. Too often, people will take their receipts, their mileage logs, their whatever they're taking into their W-2s, their 1099s, and they have a folder. If it's halfway even organized, they plop it in front of their CPA. The CPA is in mass preparing other tax returns. And by that time, guys, it's too late to take advantage of some of the tax codes. So a CPA, believe it or not, they might be filing 600, 800, maybe even over 1,000 tax returns in a year. So if you think about it, it's really tough for a CPA to provide you with good tax advice at that point. In fact, it used to be the CPA made 80% of his revenue from good ideas, and about 20% of his revenue came from filing taxes properly. And now it's just the opposite. The poor CPA, they have been facing a lot of changes in their industry. And so now about 80% of their revenue comes from filing people's taxes and 20% from good ideas. So, turning in your information to a CPA on, April 14th is not a good time, right? The time to talk to your CPA is after he's had his 2-week vacation, and talk to him in the first part of May, when he's fresh and when you're fresh, and they can probably give you better solutions in that way. So that's the first thing that I would say, just to be a little bit more proactive. Most CPAs are doing an awesome job. It's just the nature of their business.
And that's human nature. We wait till like the 1st of April and say, oh yeah, we ought to be getting this together.
Absolutely.
By strategizing, you're saying start in May.
Start in May, yeah. Start in May, because while you're fresh, while the CPA is fresh, let them know, communicate to your CPA what you want. One of the criticisms is with CPAs is they don't really listen to the client. You make sure that you understand that your CPA understands, your tax preparer understands what your goals are. First and foremost, it's really, really important. Let me give you just a little bit of an example of how important taxes can be. If you're familiar with our progressive tax code, which means that the more money you make, the higher you pay, the more taxes you pay on additional dollars. So lately we had the new tax changes, and it will affect many people. For instance, if you've made between $19,000 and roughly $19,000 and $77,000, you're going to pay about 12% in taxes. So if you could get that down somehow, to your adjusted gross income, you could save thousands and thousands of dollars in taxes. So for instance, if your reportable income was $100,000, you're going to pay about $9,000 in taxes, $9,288 in taxes on the first $77,000, and then you're going to pay another $22,000 in taxes above that. But if you could reduce your taxable income back down to $77,400 instead of the $100,000, that's a savings of $5,000.
Now, how do they do that?
No, that's a great question. And basically, it's just a matter of taking advantage of the tax code. You are entitled to take certain deductions, and you make sure that you're taking every single possible deduction you can. The way I look at that, that's an automatic safe 5% more money in your pocket. For every dollar that you save, Emmylou, the taxpayer, for every dollar they save in taxes is an immediate, without risk, increase in their pocket, dollar increase in their pocket, in their income.
Wow, yeah, that's true. So they should know things like their child's medication.
Everything, medications, everything like that. Now, think about that again. We're going to go into some specific strategies here in just a minute, but I'm really trying to get everybody to understand why it is worth their time to employ proper tax strategy. For instance, if you're making $100,000, but you could save 5%, if you could save $5,000 in taxes, That's 5% of your income. Again, it's a 5% guaranteed rate of return. That's the equivalent of about 3 weeks of working.
Yes, that's true. Now, I have a quick question.
Sure.
You're talking about a CPA. I'm understanding you recommend hiring a CPA as opposed, I know a lot of people, use programs like Quicken, just try to do taxes themselves, and you're recommending a CPA because they can get this help in strategizing?
Depending on somebody's situation, certainly. If they're earning, especially if they have a business, make sure that you're working with a CPA or a qualified tax advisor, a qualified tax accountant, or tax preparer. That's my view. Yeah, they might spend a little bit more money in preparing it, but they might be missing. The problem with most tax software is it's kind of a middle down the road guideline. It kind of defaults to certain parameters that may not be in the best interest of the taxpayer. Yes. So if you will work with an accountant or a CPA that's qualified, it could save you. It might cost you a few $100s to file that tax return, but you might save thousands of dollars in taxes. And to me, that's a great rate of return.
Okay, I understand. And they probably have a better understanding of the tax code.
Absolutely. Absolutely. Okay. Remember, there's 73,000 pages in the tax code. Who can be an expert on all 73,000 pages, yeah. Right? So probably one of the biggest things that people need to realize now is that the tax code has changed and the standard deduction has raised quite a bit. It's actually doubled from what it was. So what that means for a lot of people, not everybody, but for a lot of people, it may not be to somebody's advantage to itemize their deductions. If they don't have enough deductions on their schedules, they may be better off just taking the standard deduction because it's a little over $24,000 at this point. So that would be it. So for a lot of people, it's really good news.
Well, that is good to know.
Yeah.
I think people just assume, always itemize. Good. Yeah.
Well, and it still very well may be, and that's why you want to work with a tax professional to find that out. The other thing to consider is that business owners, the way that the tax code was set up is that the tax code really favored business owners for whatever reason. Primarily back in 1954, the IRS decided, Congress actually decided that, let's reward people for doing certain things. If you have children, you're gonna pay less in taxes. If you have a home, you're gonna pay less in taxes. If you're married, you have to pay less in taxes. If you own a business, you're gonna pay even less in taxes because you're helping to expand that tax base. So we'll reward you for that. So if you have a business, wonderful. If you don't have a business, that may be one of the things you want to consider because you're going to get all kinds of tax breaks that you didn't before. For instance, if you do own a business, one of the first things that we want to take a look at is the balance between W-2 wages and K-1 income. Let me explain what that is just for a minute. W-2 income is the income that you pay FICA taxes on. This is the federal employment. This is what you pay tax on for Social Security and Medicare. So if you have a business and you're getting $100,000, for instance, and you own a business, you're allowed to split some of that income within certain guidelines between W-2 wages and K-1 income. You will pay self-employment taxes on half of the income, for instance, on $50,000, and that's altogether, it's 15.3%. So if you took the other part of your income as K-1 income, that's $50,000. Well, you're not paying any of that federal tax, any of that FICA tax on $50,000, and that saves you quite a bit of money. So that would be one thing to take a look at. Make sure that's within guidelines and make sure that your CPA and your accountant are comfortable with those guidelines. Number two would be pay your child. If you have a business, one way you can legitimately reduce your tax bills to pay your kids to work in the business. You know, your kids, number one, they learn the value of work and earning money, whether they're special needs or whether they are, just normal kids, normal healthy kids. And generally don't pay, they're going to pay less in taxes than you would. So if you're paying your child an allowance, for instance, and let's say you pay them $100 in an allowance over whatever period of time, 2 months, 3 months, whatever it may be, it's actually costing you, the parent, maybe about $120, because you have to pay the $20 in taxes and go through. And do you see what I mean?
Yes, yes.
So if it was, think of that, if it was $1,000 over the year, that's a couple $100 or so. It could be even more of tax savings for you for doing it that way. If you employ your child in an unincorporated business, this would be if you were like a sole proprietor. You don't have to pay or withhold FICA tax as long as the child's under the age of 18. If you pay your child for domestic work, household chores, you don't have to pay or withhold those FICA taxes as long as he or she is under 21. The other thing is, if you pay your child, you don't have to pay that FUTA tax as long as the child is under 21. You don't have to pay, their unemployment tax. So that's another great way to think about it. And you don't have to worry about the kiddie tax. Now, kiddie tax is a little bit different. It's complicated, so be sure that you're working with a good tax advisor to make sure that it happens. But when you pay somebody, it's better for you to pay the child and let the child pay taxes or not pay any taxes than rather you paying it. Does that make sense?
Yes, it does.
Now you got to make sure that your kids are actually doing the work that they're paid for, and you can't pay them $50,000 a year to clean the house. And it's got to be a reasonable wage, but that will make a big difference. It could be the difference of probably thousands of dollars or at least hundreds of dollars in a year. Okay?
Yes. So what my understanding is, you would need to pay them whatever the going rate is.
Yes. Yep. And it's
hire someone to come in and clean your house.
That's exactly right. It's got to be a reasonable wage, and there are guidelines for that, and that's why your professional tax preparer will want to involve them with that.
I know where I live, I think that's like $15 to $20 an hour.
Yep, can be, just depending on what it is, correct? Yeah. So the next tip that I would provide is that make sure that if you provide cash or non-tax contributions by December 31st, we are allowed to make contributions to charity, either clothes, donations, or that kind of thing. It's a great tax deduction. So make sure that you're keeping good notes, good receipts. If you donate something more than $250, you'll need a statement from the organization. But that's a great way to immediately get rid of your stuff, donate it, free yourself from the clutter, save some money in taxes. To me, it just makes great sense.
Win-win.
It's a win-win for everybody, right?
Yes.
Many people in the area, at least in different parts of the country, make sure that you've got good records for the donations that you make to your charity or church. So make sure that those are done and paid by December 31st for the tax year in which you're claiming them. Another tip would be, let's consider giving a portion for large gifts to children before the end of the year. We have an opportunity as taxpayers to pay up to $14,000 a year to anybody, basically, any single person, and not have to pay taxes on that ourselves. And the recipient does not have to claim that on there as taxable income. So here's which is a gift. That's exactly right. So for instance, let's say one of your children want to borrow $20,000 from you to purchase a house, and they need $20,000 or so for a down payment on a house. Well, one thing that you might want to consider doing is don't give them $20,000 in 1 year. Give them $10,000 in December. Give them the other $10,000 in January.
They can still use it for the house.
Still use it. Yep.
The house at the end of January.
Yep. That's exactly right. So that way we're not paying taxes on anything above the gift amount. So in that case, you'd be saving taxes on about $6,000.
Nice.
Okay? Yeah. Make sure you know who's claiming the child as a dependent each year. sometimes parents are divorced. Sometimes people, unfortunately, that happens in life. But make sure that you're coordinating who is getting the tax deduction for each of the children. That would be a big thing. The other thing that's coming up is now the child tax credit is increasing to $2,000. Now remember, a tax credit is just that. It's a credit. It's not a deduction. The difference between a deduction and a credit is basically a credit is dollar for dollar. And even if you didn't have a tax liability, you still may be eligible for a tax credit. The IRS may send you a check for the tax credit, even if you didn't have a tax liability. Yeah, other interesting. Yeah, everything. Another thing is that if you pay a nanny or babysitter or daycare to take care of your child while you or your spouse are at work, you can claim the child independent. It's called the Child and Dependent Care Credit. And again, this is a credit, and it's up to $1,050 on $3,000 in expenses. So the IRS, the federal government, is saying, look, we will pay you money. If it costs you $3,000, we'll subsidize that and give you $1,050 for those expenses and help offset that. So that's a lot of money. Yeah, it may be, almost a month's worth or a half month's worth of wages, depending on the situation you're in. Mm-hmm. Okay, now, the other thing is, if you're considering adopting a child, remember there's $13,840. You get a credit for that. For any expenses up to that, that's a credit as well. It's not a deduction, it's a credit. So
is that a one-time?
It's a one-time thing. So those are some of the biggest tips that I would relay today on to your listeners.
And I heard loud and clear your message of communicating with a reputable CPA. Make sure you're getting expert tax advice.
Absolutely, and make sure that CPA knows what your goals are. Sit down with them. It would pay you to make an appointment in the downtime or the down tax rush season, and sit down with your CPA and go through all those things with them.
And that's the time to do it, not April 10th.
Exactly.
Now, what services do you offer through True Wealth? Can you talk about that?
Well, yeah, briefly, I am a financial advisor. And so I sit down with people and find out what their goals are, what they want to do, and how they want to invest their money, and that kind of thing. And happy to sit down with anybody. One of the most important things I try to get people to do is just measure where the money's going. And typically people have holes in their bucket bigger than they thought. And if we can plug up some of those holes, it's amazing what can happen with just the money that's being wasted unnecessarily. I'm not talking about money that's you're maybe overspending. I'm just talking about the money that you're overpaying in taxes. That money in tax savings is not a decrease in your lifestyle, and yet it really helps you accomplish your goals, especially if one of those goals is paying off debt. Why not take some of the tax savings and without decreasing your lifestyle, use those tax savings to pay off debt as quickly as possible.
That makes sense.
Yeah, that's basically what we do. Try to figure out what people's goals are and help them put the money in the proper places and make sure they're not paying any more taxes than they need to, and find appropriate investment vehicles that and good insurance products that are available for them.
Now that sounds very attractive. I know a lot of people feel like I don't have any extra money to invest. I can't cut down on expenses. But to take it from the approach of let's see how you could save on taxes.
Yeah, let's say, and it's surprising. If you could come up with 2, 3, 4, 5,000. Sometimes we've seen people come in when we've been able to help them save, $20,000 in taxes. Surprisingly, depending on where they are. Some people don't make that much in a year. Some people are paying that much or more in taxes. So it's just a matter of making good use of what the resources that you have.
Okay, just expert information to help parents. Very valuable.
Yep, absolutely. We need to take good care of those kids. I salute the work that you're doing. It's so important, making sure that families are strong and they're getting things taken care of emotionally, financially. It all works together, Emmylou. Thank you for the work that you're doing.
Yes. Well, and I'm excited to hear how they can save financially, just with some expert advice.
Disclosure. The information provided is for informational purposes only and should not be construed as a solicitation for investment in any security, strategy, or other financial product. No claim is made as to the suitability or appropriateness of any such investments for any individual or entity, or that these investments will protect against loss or prove profitable. Any information, discussion, analysis, or commentary provided or made regarding the future prospects of securities, investment strategies, and/or other financial products may not be realized. The prices of securities fluctuate, and the values of securities may rise or fall, creating the possibility for capital loss. Past performance is not an indicator of future results. Results of an investment made today may differ substantially from those made at other times. Investors should consult a financial professional prior to making any investment. Investments offered through Aspen Capital Management, LLC.
Thank you very much, Dan.
You're very welcome. It's been a pleasure.
All right, and I hope you have a great day.
All right, you too.